Hey everybody, I got Luca here. We're doing another collaboration. I just wanted to always share thoughts and ideas with this guy. He's extremely objective, he's extremely unemotional, and I have tremendous respect for him. I don't do that. Sometimes I take victory laps when I shouldn't be, but I think we wanted to talk a little bit about a few things that we were talking about last time. How you doing, man?
Likewise, about
Yeah.
the objective part. I really like your analysis, and I'm just glad our thesis has been playing out.
Yeah, I think last time we talked was like 3 weeks ago. We were talking about a couple things. One was we were talking about the rotation, how things look like they're getting a little bit more risk on, and it seems like more risk on assets are gonna end up, outperforming. And the other thing is that, overall the market just feels, more even though it doesn't feel bullish, but it looks like the setup was going to be bullish. I think since last time when we talked, we're kind of looking at a few things too that have kind of captured a lot of people's imagination. First of all, stocks like Open Door just have like this big giant green candle over here on the monthly, and like bullish and coughing for seven like monthly candles there. A lot of short squeeze has been going on. A lot of stocks that seemingly were dead, like Unity, just end up having these big giant green candles, and it's just even Lucid was catching a bit, like all these crazy stocks has just been beaten down and they're going through a lot of short squeeze and and whatnot. But the reality is, I think that we kind of see that coming here a little bit, just because when it comes to the large cap versus small cap thing, when you start to have a little bit of a risk on sentiment, generally you have more like a rotation from the large caps to the small caps. So this is Russell 2000 over SPX. Russell 2000 is the small cap, index, and SPX is S&P 500, the large cap. So I really do see that over the last few years we've been favoring large caps to the extreme, because Russell 2000 severely underperformed the S&P 500, as opposed to how it was before over here from like 2000, like from here really through the year 2000 all the way to, like 2010, 2012. Small cap actually significantly outperformed large caps, but I think that we are getting to the point where here we had a huge bearish divergence and here we have a huge bullish divergence. So here it would favor for large caps to outperform for years to come, and it did. Whereas here, I think we might be building up something else here where maybe we're actually be favoring small caps, maybe over at least like the next couple of years to come. We'll see, you know, maybe even longer. I think that's a possibility. The other thing that I was also kind of showing is, everybody's been dogging on Cathie Woods. The ARK fund has been underperforming the QQQ, the NASDAQ, for a very, very long time. But looks like the trend is changing, because the ARK fund over QQQ ratio here on the monthly over the last year has been forming higher highs and higher lows and is reclaiming this 20-month moving average. And it looks like it's becoming a little bit more impulsive here versus the QQQ with the bullish band expansion. It looks like ARFIN wants to continue to kind of outperform QQQ. So there are these kind of things that we're seeing in the stock market that are leaning more towards risk on. And I'm kind of wanting to hear your perspective, Luca, based on what I'm showing you. What do you think it's happening here?
Yeah, I think there's definitely a lean towards more risky investments because as we near the cycle top, generally we have a very high risk appetite. And also, what I would like to touch on today is the Genius Act that just came into law. This is very interesting because some of the things I've been tracking, I have this thesis around an emotional gap that would develop in the next couple of weeks. From a fundamental perspective, I think that seeing risk assets right now outperform makes a whole lot of sense because the markets are currently pricing in upcoming rate cuts. The CME Fed watch is currently pricing in them in September. I think that it is likely we could see them in October. And some of the things I've been saying around rate cuts is that rate cuts in themselves aren't something positive for the markets because they signal Fed's intervention and their desire to change the trajectory of the economy. So whenever we have rate cuts, it signals just that the current path the economy is on right now isn't sustainable anymore. But the fact that we're seeing stable monetary policies, and this is something that we've discussed in some of our prior collaborations as well, as long as we see stable monetary policies, I believe that it is very likely the markets will just keep on going higher.
So I put up the 10-year here, and basically the 10-year yield has remained stable, just like what you're saying, ever since October 2022. It really has not changed at all. We've been really ranging anywhere between, 3.5% to 5%, and there's really no change. I think the market and the economy in general is used to higher for longer now. Like it really hasn't bothered the economy, and I think you can still have stable monetary policy with yields around 4 to 5% and still have increased global liquidity and increase in the USM too. And if you're also looking at the 10-year yield as well, and you can chart these things because they reflect the overall market conditions. Actually, it looks like the 10-year yield is losing steam here. This really looked more like a distributive kind of top here. And with the 20-month moving average was, serving as great support here, but it's really trying to lose that as support here. It really looks kind of weak. And you also have the Bollinger Band squeeze here, which tells you, hey, maybe we were going to have some rate change here. I do agree with you. I'm not sure whether or not rate cut is not necessarily necessary. And also rate cut may not necessarily be a good thing or a bad thing. Like to me, it doesn't really matter as long as the economic policy is stable. And but with that said, it does look like there might be a change in the 10-year coming up soon over the next like 6 months to a year, just because the Bollinger Band is really squeezing here. So hard to say, but certainly currently the stability of the market has been really kind of playing out. The other thing I wanted to ask you, and I wanted to show you something here that is something that I've been eyeing. You mentioned about the Genius Act. I actually want to hear your thoughts on that. But before I do that, I just want to show you the Coinbase chart. I mean, Coinbase is going to be a huge beneficiary if stable coins and crypto becomes mainstream. They're going to benefit tremendously, and it's certainly been showing on the price action that I think that we're getting set up for something extremely impulsive here. The reason why, and I'm putting Coinbase here on the left, I'm putting Palantir here on the right. There are really two things here that I see that I think Coinbase could end up being very explosive, kind of like what Palantir has been doing for over the last year. The reason, from a technical standpoint, is because it broke away from very, very important fib levels. Like whenever you break the 0.86 lock fib, generally things get pretty impulsive and it will likely make all-time highs. That's exactly what happened here with Palantir, right? The other thing too, if you look at a monthly Bollinger Band, whenever you have something impulsive like that, and whenever you have a Bollinger Band squeeze here followed by a Bollinger Band expansion, generally the expansion just keeps going on for quite some time. And these for like, the next few months or so. So I saw that over here during Palantir, and as soon as I saw the Bollinger Band expanded, and as soon as I saw Palantir close about the 0.86, I thought Palantir was going to do some great things, and it certainly seemed to have worked out. Whereas Coinbase is kind of looking like it's having the similar setup here. So yeah, I am curious about your thought on, Genius Acts, how it would, reflect on the crypto, space in general, and how liquidity is also coming in. Like, what do you see coming, man? What are your thoughts?
I mean, Coinbase is one of my top three holdings in my equity portfolio. I'm really bullish on Coinbase moving forward, though I have de-risked about 20% of my position because we have gone up quite a lot over the last couple of weeks. But overall, I think that Coinbase will really perform well in the next couple of weeks and really benefit from the Genius Act and the fundamentals. I mean, when we enter periods of irrationality, like I expect we're going to have in the next couple of weeks and months, generally we have a spike in the fees Coinbase and the other exchanges make, because there are a lot of retail investors that pile in, that buy either a lot of altcoins or over leverage themselves. And but the main point is that exchanges make a ton of money from fees. And I think that the markets are beautifully reflecting that in their price action. Coinbase has actually formed new cycle highs above the November highs. And the Genius Act, I mean, paves the way for institutions to really start playing with stable coins and crypto. I mean, it is a very big improvement, and I believe that it is pretty much the beginning for institutions to start adopting crypto. In my opinion, it isn't something surprising, because as Bitcoin and crypto in general matures, it was expected that at some point institutions are going to start coming. And I think that Coinbase, being the main exchange that will be used by institutions moving forward, will benefit a lot off of that.
I agree, and I think that it's not just Coinbase, but also like Robinhood is also going insane as well. And
Yeah.
that they might be a beneficiary for stocks, but I think that they also will be beneficiary for crypto as well. And I think things just been going insane for both stocks. I mean, I don't know when Robinhood is gonna end up having any kind of pullback, which is just absolutely insane to me. Looking at the Coinbase chart here on the right, and also looking at the others chart here on the left, which is the cryptocurrency total market cap excluding the top 10 coins. So you're not talking about Bitcoin, Ethereum, or like the stables or anything. It does look like they basically have the same morphology, the same cup and handle formation, and the same kind of like a little bit of like a Elliott wave flat, like wave two kind of thing, maybe, or wave four, depending on how you decide to count. But it does look like Coinbase is ahead right now. It had the breakout, like you said, already had a wick above the previous all-time high here. Whereas it looks like the rest of the cryptocurrency market cap stock here, the chart here, the others chart, look like it had a bullish engulfing candle. It looks like it wants to do some very similar things over here compared to Coinbase chart, but it just hasn't really done that yet, so it's kind of lagging. It does look like we are gonna get some explosions here in altcoins too, based on the fundamentals and based on where we are with the liquidity cycle. What do you think?
I agree, though I think that it is likely that an alt season will get pushed a couple more weeks. So we could have more of a chop and sideways price action for the next couple of days and weeks before eventually having this explosion to the upside. The main reason why I think this would happen is that when we have durable altcoin outperformance, right, and we have a proper alt season, that's generally when Bitcoin enters a distribution phase. And I don't know if it's the bias in me talking or that I want higher Bitcoin prices, but I personally would like to see an alt season later, because that would mean that Bitcoin will also go higher than it is currently.
I think we did mention about the Bitcoin dominance as well. You know, it's just been going up on a straight line for 2 years. It's just been absolutely, actually, it's been closer to like, you see, like almost 3 years. It's just been going a straight line up. And I think we are finally getting pretty close to a very important Fibonacci level here, which is a 0.786.
Yeah.
Didn't really quite touch it, but so far we're having a pretty significant reaction in terms of the downtrend here, right? I mean, we are still back testing this horizontal zone over here, and we might still be, back testing like the low Bollinger Band here. We might end up bouncing from that, and it can
Yep.
certainly make a V-shaped recovery and re-challenge the 0.786 here again. So I don't necessarily think that Bitcoin dominance is done yet, but enormous strength. It's been basically doing the same thing that it did from previous cycles, where you have something that was holding the trend line here, but broke down to grab liquidity and throw, retail offsides, and the next thing you know, you just break above and just went up a lot higher, right? Same thing happened over here with COVID, broke down and then, eventually broke back above and just went up a lot higher. We had the same thing that seemed to have happened here, where we broke down underneath this trend line had a bearish back test here, initially it was kind of iffy in terms of whether or not you're going to make a higher low or a lower low, but it ultimately ended up making a higher low and then it ended up breaking above this trend line here. So I cannot really ignore the strength of, Ethereum right now. And also Ethereum dominance have also went from like 7% up to currently 11.3% in quite a hurry too. And it looks like it's been forming higher high and higher low, and it looks like it wants to do a trend change here. So what do you see overall based on looking at the market right now? Just looking at these charts.
I think Ethereum is definitely outperforming right now. A lot of people have considered it for quite a long time that that's what I think happened. Not there weren't a lot of people who actually expected this upside
Yeah.
and this reversal to happen so soon. So there were a lot of people who were thinking that there were going to be other sectors that would outperform, such as meme coins
Mhm.
and other sectors, because as we all know, the altcoin market isn't the same as it used to be back in 2017 or back in 2021. It isn't an everything pump. Now we have key sectors that pump and liquidity rotates from one sector to another. Back in 2024, we had memes performing absolutely great. And now people expected that memes are going to keep outperforming. So I think that now liquidity will start flowing more into the utility coins while memes will most likely underperform.
There could very well be some distribution that's happening with Bitcoin. I mean, it is forming all-time highs, and it is still trying to push up, but the momentum so far is just not as high as, Ethereum and some of the other altcoins, like the older altcoins like XRP, things like that. They've been performing very well. Bitcoin still looks bullish. I mean, I think it's still kind of broke above my horizontal level and still holding that as support right now. It looks like it wants to keep going up higher. I guess it's just a question of what would be the best, things to kind of put your money into position. I am not completely giving up on meme coins quite just yet because there are some that are actually looking pretty decent. I do have a small position in Fartcoin and actually is looking like one of the more stronger ones. And it's just because it's how ridiculous it is. So I do think that utility coins will have their moment to shine, and they are doing that because if you're also looking at even like Chainlink, I think it's looking pretty decent here on the weekly chart that I have here because it's forming a beautiful double bottom and it's been trying to break above a range here for a very long time. It's been trying to break above this arc here for a very long time. It's finally looked like it's got some strength to kind of break into this resistance level over here and change its fate. And if we're able to break above this liquidity zone over here, then you talk about some of the higher liquidity zones. And once you break that, there's not really a whole lot of like, price history here. I think something like Chainlink is going to go up a lot higher if we end up breaking above this liquidity zone here. I've been spending a long time trying to do that. So it's interesting to see a whole cryptocurrency market like where it's going. So what utility coins are under the radar that you're interested in?
I mean, I like Link too. I own Link, I own XRP, which has been performing quite well over the last couple of weeks. I own CRV as well because they have great fundamentals and I love their overall market structure. And yeah, I mean, I also own AI. I think there are also some great opportunities for AI tokens and overall crypto projects to integrate AI agents on the blockchain. I think that would be a very strong narrative that could propel these tokens up by quite a lot. And yeah, that's pretty much what I've been tracking.
Yeah, XRP certainly looks like it's a change in behavior because the weekly Bollinger Band was kind of, squeezing for a long time because nothing's been happening, and now we just had a breakout. Just kind of
Yep.
like what happened last time, I think this is probably gonna end up keeping on continuing on. So, yeah, no, I think you got a lot of really great picks here. I'd be interested in, seeing your charts here in a little bit too. The last chart I really want to touch on in terms of liquidity, and I still think that we have more room to to go up on really is China. I think a lot of people are still kind of ignoring the fact that there is a lot of liquidity globally that are coming because if you look at the Chinese market, it's just been forming higher highs and higher lows, ever since January 2024. And a lot of people are kind of ignoring that. Now it's really making to the point that it's breaking above some of these very important resistance level like the 0.618. It looks like it wants to get to this trend line over here to touch, the 0.786, which is going to be a pretty significant gain from here moving forward. How it reacts there, I don't know. Like that could be the end of the cycle, or it could keep on going up a lot longer. If past that, I think we have to kind of see what happens maybe in a few months when it gets up there. But this is strength right here. With the Hang Seng Index monthly, this is strength. There's
Yep.
really nothing else to say about that. And because of this, it looks like most likely you're going to have continued liquidity go into Bitcoin and most likely going to end up having a lot of liquidity go into altcoins, and I just don't see us having any major crash anytime soon, at least for the foreseeable, like over the next, few months or so, because of this. Now, I don't know what kind of your thoughts are in terms of global liquidity and kind of what kind of thoughts you had that you're seeing as well. Be interesting to hear your thoughts.
I mean, Chinese liquidity is not going to stop flowing anytime soon, in my opinion, because
Yeah.
China is trying to salvage their economy, is trying to build back their real estate market, their overall well-being of the economy, and so forth. So they are full on printing liquidity. And I think that this is beautifully reflected on the charts here, right? The charts always tell a story before the news or the data really do. And as long as we have the Hang Seng Index going higher, it suggests that liquidity will keep flowing, that major Chinese investors are still expecting liquidity to keep flowing and better fundamentals overall, because new liquidity would improve
Mhm.
certainly the fundamentals of a lot of companies and their revenue and overall consumption rates and so forth. So that is absolutely great. And I think that the price action of the Hang Seng Index is reflecting that. And overall, these are global markets. So liquidity will spill over into the most globalized assets. We've seen gold performing really well over the last couple of weeks and months. And I also think that liquidity will start flowing into Bitcoin as well. And it has.
I love the fact that you mentioned that whenever you have global liquidity, it's going to improve the fundamentals of companies because a lot of people are looking at PE ratio and they're looking at these kind of delayed indicators and they cannot even imagine how bullish things could be and how whenever you have liquidity coming in, companies are going to do extremely well, much better than you think. So I love the fact because a lot of people are just kind of citing these kind of delayed metrics, if you will, and it's not even like I don't even know like companies like Coinbase and Robinhood, like people are already sniffing out that something big is happening and it's being reflected in the price. So yeah, I love your ideas on that. So
Yeah. Yeah. I mean, company fundamentals play a role to some point, right? You can assess a company, you can assess how it fits into the overall industry or sector, but at some point you have to really think about what the markets think about that company and how the markets see that company, because you can have a company with a very low PE ratio that keeps underperforming because it is not in the right industry or the markets don't see it as with the potential of outperforming in the future. So I'm a big believer in the efficient market hypothesis, which tells us that information always tends to get included in the price. And because the markets are always foreseeing, you're going to have better fundamentals. If you have better fundamentals, then you can have something that you can base your overall thesis on. I personally use company fundamentals as a way to fit that company with my overall personal preferences. So whether that company has a high growth potential, whether that company has a very strong balance sheet and it is safer, or whether that company has a low debt to equity ratio and it is safer from a financial perspective, I believe that's how these company valuation tools should be used to fit that company with your own personal preferences, but you should never put too much weight on one tool alone.
I love that. No, actually, I do think about the company's fundamentals. I just don't really like to talk much about it because I'm never really that good about talking about fundamental analysis. But when I choose a company, I do care about the business model. I do care whether or not they are in this cycle, if they're gonna end up benefiting from, liquidity pouring in, because there's usually certain themes as well that that will favor certain business models during certain cycles, and you have to feel the pulse of the market by looking at the charts to kind of get an idea. But on the other hand, you also would, benefit from any additional information from the balance sheet, from earnings, from those kinds of things. But in general, I favor the charts because they really tell a good story about where liquidity is going into.
We were earlier talking about the distribution range and how altcoins tend to perform well when we have a distribution from Bitcoin. This is basically what we've had throughout this cycle. This is the ASOPR metric, which basically shows us how many Bitcoins in profits are getting sold. So the closest we've ever gotten to a distribution range was back in March of 2024, when we see here each time the ASOPR spikes, it means that somebody's selling big and somebody's securing a lot of profits, right? Generally, what we see in distribution ranges is that we have multiple spikes like this. We've had them back in 2021. You can see here how many spikes there were every single day. You had pretty much a big spike in this distribution range, and then later on you had the bear market. Then we had these major liquidity outflows coming on off from Bitcoin, and here there were a lot of people who were selling back in March of 2024. That's when we saw altcoins do really, really well, right? Then we didn't really have a lot of selling back in November. Of course, there were some incremental spikes, but there wasn't really a lot of selling, which is why I believe that this wasn't a prolonged consolidation phase. This didn't lead to a prolonged consolidation phase because we didn't have a lot of selling going on back in November. And so we had this 20% pullback and then later on quick reversal. And now it seems like we've had the first big sell in a long time. So it happened about actually 3 weeks ago. But in order to see a proper distribution range, and in my opinion, a proper alt season, we need to see multiple of these spikes. So the main concern doesn't come when we have the first spike. It comes when we have the second and the third and the fourth, which signals that that is a durable distribution range and somebody's distributing. Until we have that, I think that it is very likely that Bitcoin will keep on going higher. And these Glassnode data indicators are really useful to assess this, right? We've had this happening back in March. We've had a bunch of spikes as well back in 2023, which led to this prolonged consolidation phase. So generally what happens is that when you have a bunch of sell orders and a bunch of people, a lot, especially market makers and whales distributing, is that you either have a prolonged consolidation phase similar to what we've had back in 2023 or back in 2024, or you actually have a macro top that develops. That depends on whether you get altcoin outperformance or not. Back in 2023 and 2024, altcoins bled against Bitcoin and altcoins kept underperforming, which signals that liquidity didn't flow into altcoins because there wasn't a sufficiently high risk appetite in the markets to lead to a cycle top formation. Now, however, if we see altcoins outperforming while there are liquidity outflows from Bitcoin and a bunch of these sell orders reflected in the spikes in the ASOPR, that could mean that we're nearing the end of this bull market. Yeah, I think it is likely that we're gonna have 4 to 5 of these big spikes and then some little spikes similar to what we've had back in November, which also signal distribution, but not to a very big degree. And that's when we also have the Bitcoin demands going lower. So that would be also a very strong confluence to this, because it signals that liquidity flows out of Bitcoin and into altcoin. So far, when we've had these high time frame accumulation ranges all throughout 2023 and 2024, the Bitcoin dominance kept on going higher. So liquidity didn't flow out of Bitcoin, but it just was taken out of the markets and then reinvested back into Bitcoin. That's what happens. When you have a rotation towards altcoins, that's generally an indication that, okay, somebody's using that very elevated risk appetite that has led to an alt season in the first place and to a distribution towards risk assets to actually distribute and start securing a bunch of profits. There's also another very interesting metric that I've been tracking, which is the NVRV Z-score, which basically shows us how overvalued Bitcoin is. So we've had it back in 2017 going above 10. Then back in 2021, we've had it above 7. Now, this cycle, it has been relatively low, though we've had these local top formations that have developed and have led to significant pullbacks. Now, with what this tells us is that as Bitcoin matures as an asset class, we have to adapt our analysis and how we read these indicators, because we cannot expect that the MVRV Z-score will reach the same levels it has reached back in 2021, when there was a completely different macroeconomic environment and Bitcoin wasn't as matured as an asset class as now. So we have to sort of adapt our own expectations to the current cycle. My personal expectations is that once we'll reach on the NVRVZ score levels of above 4 to 5, that is an indication that, okay, we're approaching the overvaluation territories and it is time to get out. And the way I correlate all of this is that we'll have a very high risk appetite in markets in the next couple of weeks and months that will eventually lead up to distribution range and a rotation towards altcoins. A rotation towards altcoins, which signals a very high risk appetite in the market. Going to Bitcoin, a thesis I have shared multiple times before, and I promised to Cantonese Cat I wouldn't explain it today, but I'm going to do it anyways.
Do it.
So back in 2024, I have made this correlation multiple times that we had an extreme fear environment back in August where market makers have essentially accumulated. So we've had a bunch of fear, a bunch of liquidity traps. You can see this massive liquidation cascades which happened. Liquidation cascades are very interesting because we've had them all throughout early 2025, which is a thesis I have covered many times at the time. We've had these series of untapped lows that were developing on the low timeframes, and eventually they all led to a liquidation cascade. Now, the reason why we see these liquidation cascades in the first place is that at these untapped lows, there are a bunch of stop losses of long positions that are sitting there. And eventually, you have some sort of bearish announcement or some bearish narrative that comes out, and then you have a drop. And this drop triggers all of those stop losses, all long positions, which are actually forced sell orders, which represent the perfect counterparty for market makers who are trying to accumulate. So you've had them over and over and over again happening all throughout early 2025, which in my opinion has coincided with what we've seen from July of 2024 to September of 2024. Then you have the transition period. The transition period is generally when the price reverses, but you don't have people becoming really euphoric and really excited that we are back. Because even though the prices have formed new all-time highs, at this reversal, we didn't really see a bunch of people being all that euphoric. And I remember all of the bearish narratives when we reached the bottom back in late June, with all the geopolitical tensions that were rising, with the Israel to Iran war that was going on at that time, with the tariff headlines reemerging once again, and all of these things. But this was actually preceded by this very interesting environment. So basically what happened is that since we reversed back in early April, we didn't really have any substantial pullback along the way. Instead, we've had these shallow consolidation ranges that all preceded all the moves up so far, right? And that's how you get attached to your bearish bias. Because let's assume you sold here at the bottom, you look at the prices going up, you wait for some sort of pullback, right? Because you don't think that the risk reward is in favor of the buyer currently. At the time we were testing this bull market support band, we were at a resistance range. So of course, you assume that it is not a good time to buy. You wait for lower prices, you wait for some pullback, you wait for, from an elite wave standpoint, let's say a corrective wave two, something similar to this, before eventually continuation back to the upside. But that pullback doesn't come. And so the prices keep on going higher. Then here you did the same thing. Here there were a bunch of bearish divergences that were building on while the prices were forming higher highs. The technical indicators on the low time frames were forming lower highs. But here there were a lot of people who said the same thing. And here as well, we were testing the prior all-time high resistance range. You don't want to buy here. And eventually you get attached to your bearish bias. You have your bearish bias, and then you start seeking for confirmations. You start seeking for narratives that would confirm this bias, right? It is called a confirmation bias. So you have them. You have all the narratives that confirm your bias that we're going to have a prolonged consolidation phase, because in all years, in 2024, in 2023, we've had them. We're going to have the 2021 fractal playing out, where we had a higher high and then eventually we rolled over into a bear market. We're going to have a breakdown because of the geopolitical tensions that are rising, and that could lead to stagflation and so forth. You have all of the bearish narratives you need to confirm your bearish bias from selling the bottom. And then you're hit with the emotional gap. Now, the emotional gap is something that has also happened back in November. It has the main purpose of acting as a very rapid transition from a state of anxiety, uncertainty, and fear to a state of full-blown euphoria. And in my opinion, this is how market makers are going to distribute in the next couple of weeks, and how they're going to once again use retail as their counterparty after using them to accumulate all throughout early 2025. Now we're going to have them using as a distribution counterparty. And we're going to see a bunch of positive narratives. We're already seeing them, right? With the Genius Act that just got passed, with all of the upcoming bills that are waiting to get passed and signed, with upcoming rate cuts and the narrative around the end of quantitative tightening, how new liquidity will enter the markets, and how we're going to have this super cycle. They're already lining up. And I'm not saying that we are not going to go higher. I think we're going much higher than this. But we have to keep this in the back of our minds that eventually this is what this environment leads to, which is a cycle top formation and distribution range. And in my opinion, this will be how market makers will make retail increase their cash exposures at the bottom. Then they don't allow them to entry back lower, because here we had pretty much a straight impulse up. And then they're hit by this emotional gap, so they have to FOMO back in forcefully because they have missed out on this whole move up. But at that point, I believe that the distribution phase will already be in place. And as I showed earlier, we're going to see multiple spikes in the ASO PR. We're going to have the MVRV reaching levels of above 4. And those will be the sort of signs that will give us an indication that, okay, the distribution phase is beginning. It's time to de-risk some more. So, do you have any thoughts on this? I mean, this
Oh,
is my
yeah.
thesis. I have talked about, I don't know how
It's
many times
beautiful.
about it.
No, no, it's beautiful because I think as a student, and we're both students of the market and of liquidity and of cycles, this is like that's why we love Bitcoin, because it's just so illustrative in terms of what happens with emotions, with liquidity, with what happens with the market. Is so illustrative that I love Bitcoin. Like I'm not even talking about the fact that Bitcoin rises over time. I'm talking about not even talking about the fundamentals of Bitcoin. I just love Bitcoin because it illustrates the liquidity, where we are with the liquidity cycle, like perfectly, both in terms of where money's flowing into as well as the emotions of the market. This is absolutely beautiful work. I
I mean,
do have some questions for you though. And
okay.
they might be a little bit challenging and may not be fair questions. So looking at like the higher time frame here, Bitcoin's been forming higher highs and higher lows for really for the last 2 or 3 years, right?
Yep.
And Bitcoin dominance just continued to go up and up and up. And it hasn't really dropped all that much. How usually when we have that parabolic bull cycle, Bitcoin dominance drops, right? And that can happen anywhere from at least 6 months to a year. So My question to you is, what do you think about the 4-year cycle? Do you think that we are, going to end the cycle roughly around the same time as before? Or do you think that because the Bitcoin dominance has just been pushing up and up and up, and now it's just really starting to kind of drop here, that the cycle might last a little bit longer because it takes time sometimes for whales to distribute?
Well, this is interesting, and I've been thinking about this myself. I think that the best approach is to take the markets level by level, right? And not declare anything, not have a very fixed stance until something fundamentally changes. I believe that until proven otherwise, the 4 year cycle is still intact, right? Because we've had it over and over again playing out. Every cycle has been a 4 year cycle. Basically, you have a right translated cycle, a 3 year bull market followed by a 1 year bear market, right? And if we are to follow that, it would mean that this year would be the cycle top. However, if we do not get the cycle top, and if we do not get the confluences and the developments I mentioned earlier, I think there is a very high likelihood that we could have a super cycle developing. But for now, every confluence I look at is signaling that we're going to have the 4 year cycle playing out once again.
I think it's absolutely a reasonable thing to say because if to say this, this time is different is usually a very dangerous thing. It's just that Bitcoin dominance is just going on a lot longer than I've expected for the cycle. Like that kind of makes me wonder a little bit more because if they end up distributing and it ends up being a very euphoric distributed phases, usually they last for, at least 6 months. So it does make me wonder, whether or not we have time for that. What would be kind of your invalidation points for a 4-year cycle, Luca, that you'd be looking at?
Well, having the Bitcoin dominance strong once again, if we have a V-shaped reversal from here and the Bitcoin dominance just continues staying stronger for longer, that could be an invalidation scenario. Or another one could come from the overall macroeconomic environment, right? Rate cuts getting pushed so much into the future, maybe into next year, that it doesn't lead to this very euphoric environment where everybody screams for the end of quantitative tightening and the risk appetite doesn't get sufficiently high to actually lead to a distribution range. And that could be another invalidation, or another invalidation could be from the ASOPR, which doesn't have any more spikes,
Hmm.
right? So that means that market makers and long-term holders aren't yet distributing, and that we could go on for longer, right? So I think that the best approach is to, and I always say this, right? If you're really good at what you do in the markets, you're going to be right about 60 to 70% of the time.
Hmm.
If you're really, really good.
Hmm.
But 30 to 40% of times you're going to be wrong. So there is predictability and unpredictability, in my opinion. That's how I view the markets. So I predict that at some point I'm going to be wrong. And so I have a portfolio that allows me to quickly adapt myself. I think that this is the most important thing that an investor should have, which is flexibility in his portfolio. And this is always why I have 5 to 7% of my portfolio into cash,
Hmm.
right? Generally, what I do is, as we have invalidations or further developments on the charts or on the overall fundamentals, on chain data, and so forth, I adapt myself. And that's how I think the best approach is currently. We don't know whether the 4 year cycle plays out once again, or whether this time we'll actually have a super cycle driven by institutional adoption and so forth, right? And Bitcoin maturing as an asset class and now performing more like a commodity rather than a risk asset. We could have that. But until we have a proper invalidation, I think the best approach is to remain flexible and remain open to multiple possibilities here.
Yeah, no, I need to hear this from you because I'm usually more of like an optimist at a fault. So I actually am, I thoroughly enjoy your thoughts. I thoroughly agree that it should be taken one level at a time. I totally agree that there should be invalidation and that there should be alternate scenario and that we're not here to be right all the time. As long as we get more right than wrong, we're already winning. So I agree with everything that you said. So
100%.
yeah.
Yep. This is pretty much what I had in mind, what I want to share here. So with that being said, I think this pretty much wraps up our video.
Yeah, why don't we end on a high note? Because I feel like I'm learning a lot, and I feel like you've shown me a lot of really great things, as always. I look forward to the next time, Luca.
Me too, man. Have a nice day.
All right, take care. Bye.